Hi everyone, welcome back to FX Capital Analysis. We're going to focus and analyze for week 36 in 2020. So we just start with our top pair and followed by our wildcard. So first pair we will start with Canadian dollar Swiss franc. For this pair, we can see in high time frame that price break the 90% rules in this area. This is the biggest correction and impulse create another correction. So we in the middle of structure. If we zoom in our time frame, price keep testing this area. If you able to sell last week from this area, you able to close few or small percentage. Price come back up in is ascending China. This is another area that can you able to sell. If price move down to downward, you able to continue your percentage and add your percentage and able to maximize that percentage in this point. And this moment, what I'm going to wait is another correction in this area and sell to the downside. So I will set my entry, which in this area depends on how big the correction. So I will set reduce risk entry and move to the downside to 90% rules. You're able to close about 7% if price playing out, move to the downside. So in this pair is a valid trade that we in the middle of structure. So if you in community, you understand what is valid trade or high probability trade, and we manage both position with different strategy or different approach. If you want to know about more in high probability or valid trade, you can join the community. You can DM us from Instagram or YouTube to join the community. So we move to another pair, which is gold. Gold in high time frame, we know that gold very high volatility in this area. If we pop up the ray line, we already break the structure and pull back to the downside again. So in this area, we move to lower time frame. For the time being, we hide first this ray line from the all high, so we can see the structure. You need to understand when you trade position or you set an entry or you focus your position, you need to understand where are we within the structure. So we in symmetrical triangle, the price squeeze to this area. So we add a one touch, second touch, and third touch. For this position, what I'm looking for is if price create correction in 15 minutes, tight flag. You see how clean is the flag, then that's the only position that I comfortable to enter. So we will move to the downside. We see what the goal will give us the indicator to sell to the downside. So if the price keep going to the structure, we see how price playing out. So in this area, that's the only setup that I'm looking for. If any flag start to create in this area, I will sell to the downside. So next we move to Austrian dollar Swiss. In this area, you understand that price already in this structure, high probability structure. Price create a flag in this area. There's a two possibility. Price break the structure and move to the downside, or price move to the downside, play this area and move to the outside. However, we see what the price show us. We zoom in to lower time frame first. Price already make a small breakout in this structure. In this area, what I'm looking is if price come back down, are we looking for this flag to move to the downside? However, there's a possibility because it's descending channel. We move price. If price create one clean flag, tight flag, flat, I will move to the upside. If we zoom out, we understand that we have a possibility and high probability that price will break out and move to this area. Okay, if we count, the calculation is about 6 to 500 pips. It's a big percentage if you're able to set an entry. To the downside, this area is about 300 pips. In structure, the best thing that we learn or trade price action, we able to trade to the upside and to the downside with low risk management. So we move to another pair, which is Australian dollar, Japanese yen. Similar to previous pair, that price already break the structure and move to the outside, and this is 90% rules. So we zoom in. If we zoom in this pair, that price keep playing in this area, one touch, second touch, third touch. So for this pair, I will looking for short term buy position, short term sell position. We see if price will pull back in this area, create a structure in this area. We count the pips, it's about 60 pips. So in 15 minutes, if price pull back from this area, are we looking for any small flag in to enter sell position. It's a short-term sell that if you're able to enter, you set entry 15 pips, 16 or 15 pips, see how big the structure, and sell to the downside. So we keep it simple, and if price keep tricking up, are we looking flag in this area. We zoom out, we look what situation are we in right now. We break the structure of descending channel. If price keep playing in this area, we're able to capitalize to downside with small short-term move, but in high probability area, which is in a broad, price will move to the upside. We're looking how the price develop, and we follow our plan and trade safely in this pair. So we move to another Australian pair, which is Australian New Zealand dollar. In this pair, price impulse to downward, create bigger correction and approach this high probability area. First touch, second touch, this is one big arc. So price at third touch or fourth touch in this area, price keep trapped in this area, and we expect price to move to another correction in lower time frame. Price already create one small correction. If you can see from previous correction, this is one correction, impulse, create another correction. If price make another touch in this area, I will set my entry, depends on 1 hour retracement candle or any candle shape formation. I will sell to the downside. So this is one of the favorite position that I'm looking for, which is priced at high probability area. impulse to downward, we need to deal with the correction. So this is very lovely position. So that's all for this pair. We move to New Zealand CAD. New Zealand CAD now at valid position because price pullback, and we at the middle of structure. Price create another big correction. However, we expect price to pull back from any point in this area and move to the downside. We see what in 1 hour retracement, 1 hour time frame showing us. So I expect price to play in this area, move to the downside, or move to this area and move to the downside again. We see how price develop and we capitalize. This is very familiar pair for most of the forecast for the past few weeks. If you still not understand or not familiar how to deal with the correction or to close bigger percentage and deal with correction, you can replay previous forecast with New Zealand CAD, because so much value that I dropped for New Zealand CAD and you able to capitalize the correction or deal with most of the correction or all the pair. Next we move to New Zealand Japanese Yen. Showing very lovely descending channel. Price keep testing in this area. So it's very expected movement from the price action. Price keep playing in this area. If you still not understand or confused, this is the example or evidence that price move using a price action. So price quite a predictable if you have the experience to trade with price action. Then we focus in 1 hour time frame. Price approach this area at high time frame or high probability trend line or area. So I'm looking a very clean flat in this position to move to the downside. At any point price move, I will evolve the structure. I will decide whether I will set entry for risk entry or reduce risk entry and move to the downside. So that's all for this pair. We keep it simple because price at the beginning of the high probability area, we need to be careful or extra careful how price approach this high probability area and set our entry and decide whether we want to set reduce risk entry or risk entry to enter the position. We don't need to worry so much. We only risk 1% at the moment, so the percentage and the reward is very high and big. So you need to deal with the correction how you enter the position in early stage or the pre-trading. Next we got 3 wild card for this week. First we at the Swiss Japanese rank, Japanese yen. So I will wait for the price to move to this higher probability area and move to the downside. Very clean structure because price coming from impulse, big correction, approach this area in lower time frame. You can see price create 1, 2 and price playing around in this area. If you're able to sell off from this double top, price breakout and create small correction here and sell to downside and stop in this area. Either price to move to the downside or price will come back up to this area and move to the downside. We see how price develop for this wildcard. We kept ready and we decided when the price start develop. So this part I am only looking for the downside. So because the probability and high probability area price will continue to the correction. If price move to the upside, I just let go I will not enter any position to the upside because price already moved in high time frame from impulse phase to the correction phase, and in correction phase price in corrective nature, so I will wait price to move to the downside. Next we move to Euro Japanese Yen. This pair is quite a lovely pattern and structure. Price move to the upside with impulse phase, move to the downside, create one symmetrical triangle and start squeeze in this area. Price has the possibility to move to the upside because this area is nature. Price move to the upside. However, if price continue with the correction, I will set a short-term sell. We're looking at lower time frame. Looking price to move to the upside in this area, and I will sell this position. We're looking how price develop and keep it simple. We calculate how many pips to the upside. It's a 280 pips. It's nothing. It can be executed by Wednesday, Thursday, end of the week. So that's all for the Euro Japanese Yen. Lastly is a pound dollar. Pound dollar, we can see how the price develop, move to the downside, create one expanding channel and move to the upside. Very clean structure. You can see the wave, the price playing with expanding channel. It's very predictable. One touch, second touch, third touch. If you're able to sell from this position, it's massive move. You can see how many pips price to move to the downside. It's about 1,800 pips. First touch, second touch, third touch. If you're able to sell from this area, you only deal with this correction. However, this is quite descending channel. You're able to move to the downside. However, if you not capitalize that move, price approaching another area with double top or fourth touch. So in this area, I will looking price to move to the upside in this area and sell move to the downside. Or other possibility, price to move to the upside in this area and sell off this area. So that's all for this week. We keep it simple. We almost end of 2020. It's very exciting years. So I am very excited to approach 2021. It's going to very solid. It's going to be a solid year. 2020 very solid year. So how you going to approach another year is you get ready and plan ahead what you looking for next year. That's all for this week. Thank you for watching. Subscribe to our YouTube and follow our Instagram. Thank you. Bye.